Okay, in a couple of hours, it's going to be a new week. Banks are going to be open, the market is going to be open, and it's going to be action and action all the way down to Friday. So, right now, last week I took only gold trades on currencies. Then I also trade derived synthetic indexes. So I probably will drop more of that later. Uh, okay, let me just go straight down. Yeah, we also gold has been on some really crazy bullish pressure in the past couple of weeks since it broke around 2042 price area. But the question now is, what am I looking at for this week? What are my expectations for this week? Let me just sharply do a rundown from last week for what I did last week. So last week, the question was, is the bullish momentum going to continue, or are we going to see a reversal back to, say, somewhere around this resistance that was broken around 2063, 2045, 47 area. So we all saw the bullish momentum, but it was a question of, is it still a safe buy, as at for those of us that were not in any position as at last week. So what I did last week was, in the early days of last week, I think around Monday, I took a buy position after a support was created around this level. Yeah, this was on Monday. Sorry, give me a minute. Around this level. So on Monday, coming from the previous weekend, on Monday this level was created and respected into Tuesday morning. So on Tuesday we had, I think it was CPI that came out on Tuesday. I can't really remember, but we had high impact news on the dollar. I was expecting, because this wasn't really a strong support on the higher time frame. This level was the higher time frame support. So it broke this level. I took a loss there. So of course, risk management is also part of what keeps us in the market and keeps us well composed and all of that. So when this level was tested and respected multiple times, I scaled on the 4H. Let me just make it clear. So just go to the 4H time frame. So on the 4H time frame, we saw that clarity in this support level. Then on Wednesday, I took this trade. You can see how it was respecting the true Asian session. So I just marked out Asian highs and Asian lows. Then when Asian high was broken, zoom down to 15 minutes time frame, I took the entry. I posted the video actually, so you just check my TikTok and my Twitter for the videos. So I took two positions here and I followed it up through. Then I got out of those two positions around Asian session for Thursday when I saw the first bearish candle. So I was anticipating price to break this trend level, which it did not. So when I just started getting this bearish movement down, I went out of the market. Then on Thursday, around London New York session, a 15-minute structure was formed, and coupled with the dollar movement as at that time during the New York cross session with London session. I took I made this setup, but I didn't take this actual trade because I wasn't confident about it, because I think a news was supposed to drop around that time. I can't remember which news exactly. Then down to Asian session. Asian session, I've noticed, is a lot calmer than New York and London session. So I increased or reduced my pips, but I still risked the same amount and took a very quick one during the Asian session. Yeah, I think I did this trade on the 1 minute time frame. That is why it's looking really tight around there. So Friday I didn't take any trade, I just chilled. So this coming week, what I'm looking at is primarily this 4H level. So when market opens, I want to see either a bounce off from this level to the upside, or a continuation followed by a pullback, a continuation to break this level followed by a pullback, then a continuation bearish for the rest of the week. So primarily that is what I'm going to be looking at for gold this coming week. So you just follow me, so you just keep getting more of these updates. Thank you very much. Gracias. Follow. Let me not start shouting like all these TikTok people. Just follow, so you just continue getting my thoughts and opinion on dollar moving forward. Thank you guys.